Adam, how are you, bro?
Hey,
How's it
Dale.
going with you?
Looks
Adam,
good.
welcome, by the way. Great day to have you here, by the
Thanks for
way.
the
Yeah,
introduction. Great, Blake.
I
It is
mean,
a lively day. Oh man,
yeah. So, we live for these days, right?
you really do. I mean, that's kind of the time where you don't have really time to catch your breath. You got to rely on experience, and nobody has more than you, Dale. So,
Thanks. Well, Moses did, and Abraham. So anyway, technically, I knew there was unfinished business above 145 in the end.
well, we talked about that was the last time I was on Face. I think it
Yeah.
was a couple, 3 months ago. It was 1,500 pips lower, and 145 was the number. You put it right in your headline when I was on. So. We did it today and it didn't last long, but it certainly hit that. I mean, it hit fractions within that earlier this month, but I mean, that's wild. It reminds me back in the S&B days, waking up in the middle of the night for us and hearing that news.
Were you up for this?
I
Adam?
I don't know, my internal clock went off about 15 minutes after it happened, I guess, just dialed into the market, just like the Matrix.
Okay.
So,
All right. So you went with the flow when you saw the first intervention starting to come in. How did you approach it? I mean,
no, I didn't go. I didn't trade anything here, man.
You didn't trade. You just watched it. Okay. So, what do you think? Is this major?
I think for me, they're intervening to weaken a currency and intervening to strengthen a currency are two very, very different things. You can weaken your own currency infinitely because you can just keep selling it. You have the currency to sell it. To buy it, you need reserves.
Yeah,
obviously Japan has huge reserves, but there is, you can exhaust your ammo. So I don't know that they don't mind 144 or 143, right? They were jawboning against it. So my first instinct is to find a spot to buy, not today, not tomorrow, but maybe the day after that, and take it back up. But listen, you're at the whims of someone in Japan, right? And their thinking process and whatever it is they're after, and you don't really know.
Aren't we always at them? But the difference is now they're beginning to think. We didn't have to worry about it because they weren't, they were only thinking about doing something, right?
I mean, and you maybe want to see it twice, maybe get back up to 145 or see what they're doing. I don't know how, if this second leg here lower is them or if it's, people getting cleared out. It's certainly been a very crowded trade. But yeah. I would have thought a lot of those people would have cleared out at when you hit the 145 twice.
No, you know why they didn't? Because, you're talking about people staying long.
Yeah.
Or because I think they had to take out the bears first before this happened, but I don't know.
It's not a bad idea for them. I mean, the timing isn't terrible if they drew it up that way, get that squeeze, and then smash it.
So you're basically viewing this as, because they're not trying to weaken their currency, they're trying to strengthen their currency, that you don't know how far they'd want to go with draining reserves, and that this is going to set up a buying opportunity. Does it have anything to do with, you think that because the yields are going to keep climbing, and that's going to make intervention successful for days at a time, but not turn the tide for months at a time?
And certainly the front end, it was interesting yesterday, and we see it up another 10 basis points today at the front end. And it's going to drive it a little bit more. The back end, you've got to imagine.
I bought bonds.
Bonds are a really, really interesting spot to be watching today, because we had the Fed decision yesterday. Yeah, it was volatile. Big inversion. Now real money kind of doesn't come in till, they don't come in after the Fed. They're moving today. So the real money's moving today. They might start buying the long end. And, we're going to get a huge inversion if that's the case, because the Fed's going to push up twos probably even further from here. And if the bids come in, we've kind of gotten through this right now. Okay, now we know where terminal is. And I think I'm getting all over the place here, but I think we know where the top is now. even if you tell me the next CPI report or the next two CPI reports are a bit above expectations, I still think the Fed's going to pause at 450, 475, somewhere in there. Now, if they're lower, there's a very good chance of that we start to see a bid in bonds, because the next trade is the recession trade.
Right, growth scare. Recession,
that's right.
yes.
So we're kind of past the rates going up scare. We've seen the top, I think, now. And so if you're looking at bonds, I don't know how you can think it gets better than this, especially if you would have to have a material move up in growth and inflation again to get the Fed thinking about going up above 5. And maybe that happens towards this time next year, but you've got clear sailing for 7-8 months here on bond long. So you're going to get a huge inversion. So that recession trade is on.
Okay.
But
even if it's just a bear market rally from the highs at 156 to 106, that's 50. Why can't it rally back halfway? That would take it back to the breakdown at 131.
Right. And there's a lot there's a tips auction today. So that'll be a spot to watch to get a sense of real money as well. And bonds are, and I guess with equities though, if you get bonds, I don't know, we may have this topping trade going on. Even, what was interesting about the dots to me was I should pull it up, but it's the second dot, the 2023 dots, sorry. The highest ones were at 475 to 450. There were 4 dots there. It means there's nobody around the Fed table arguing that we're going to have to take it above 5, right? So once they get to 450, everybody's happy to wait and see. And everybody believes inflation's coming down. So there are really no hawks left around the table, starting around the turn of the year. Yeah. So now you've sort of seen the top. Yeah, we probably had to ratchet the top up a little bit yesterday, but another 20 basis points or from what was priced in, not that big a deal. So I wonder who steps in here. At the same time, the volatility in the landscape is insane right now. You're dealing with 3 central banks decisions here in 18 hours.
What a great time to be alive.
It is.
So, do you have a view that I would suspect then that you don't think the dollar's peaking out here yet either, right? And there are lower numbers coming for euro and cable yet?
It's a pivotal moment. You look at the dollar charts, I can't remember a time when so many charts were really on the knife's edge. Breaking out to, 30-year lows, 20-year lows, multi-year lows.
Look at the daily here too, Adam. This is the first, I don't have to put my cursor up to see that it's a divergence from the last high that we had in September. So, could that be it? 1.618. I know a lot of people were talking 112. It could happen, but I don't think I want to be pressing the long side of the dollar here.
I wouldn't either. You sort of asking me about that, but I think you can buy dollar yen on that kind of trade. We'll see where they're at, but there's a massive rate differential there. But I don't, by and large, the dollar, it's crowded. But I will make 2 points. If you look at the 2 last big dollar cycles, and even you might remember this one, Dale, in the 70s, Plaza Accord, that was the dollar cycle. Right. And it didn't end till the Plaza Accord. And then if you look at the 90s, massive dollar bull market again, and it didn't end until there was intervention in 2000. You had the dot-com bust, September 11th, all that. But it didn't end with that out-coordinated intervention there. And now it took, 8 months or something after intervention in 2000 for it to top. And this looks like the biggest dollar bull market since then. And if you think about the dollar, it has this place in the financial system and in everybody's mind around the world that once it gets going, it creates its own momentum because it's the dollar. And now there's this safety trade, right? The yen's out of the safety trade. The Swiss francs mostly out of the safety trade. The Europe is in a bad shape. China has uncertainty more than it's had in 20 years. Yeah. There's war in Europe. Emerging markets are a mess of inflation. So there's this really,
The world
really
would be served with a weaker dollar.
well, but the impetus is to buy it, right? You have all these people in all these places saying, boy, I should have more dollars. I should have more dollars. And yeah, things might not be great in America or wherever else, but they're better than really almost anywhere else. So you have the safe haven flows, you have growth flows, you have rate differentials, you have momentum, and you have the emerging market bid. So what's going to stop that? And I think, yeah, there's probably a tradable high in the dollar here now, but we may get to a point, and maybe the Bank of Japan's there now, but where we see some other currencies and we do get that coordinated intervention. Now, what would have to happen? Probably cable parity, something like that. The euro another 10 cents lower along those same lines.
Yeah.
So that is kind of what I'm thinking about right now. I don't think we're there, and I don't think that's the trade right now. But how does this dollar bull market really end? I don't think it ends on its own weight. I don't think it ends on rate differentials.
Yeah, it's going to end with intervention, like a plaza court.
It could be something like, I mean that.
I talked to Shy Girl, and they said that they were, checking facilities. I talked to her last week. They were testing the U.S. testing.
And I don't know if that happens until America wants it to happen either. And I just don't think we're at that point yet either. But corporate earnings, they might start to turn here pretty badly.
The S&P's, under the trend. I have a hard time. That's going to be the question. Do you think that a bond market rally is going to be supportive of risk, or it happens because of risk off?
I mean, sentiment is terrible here right now. A couple things. This is the single worst week of the year seasonally for equities, in the worst month. So, it feels like sentiment is really terrible right now.
Oh, it is.
But, the thing about implosions is they happen when sentiment is terrible. So we could be at that point where it just gets disorderly from here, where the market says, listen, these morons at the Fed are going to hike us into a recession. I'm getting out of here. I can see that trade unfolding, especially when I can buy bonds. But I can also see the money flowing into bonds and equities saying, you know what, growth's still okay. Unemployment's at 3%, jobless claims at 216 today. And I'll buy risk. Like the economy, it's still hard to get to that place where you're saying this is a terrible recession coming, because just not enough data there yet. Okay. But
we need some of the backward data to start, like the unemployment rate to go up, and all the things that we look at, leading economic indicators and all these things say we're already in a recession.
I mean, I think a lot of that though, it's strange, right? Because you're coming out of a manufacturing boom that was artificial, and I think you normalize a bit of that. You see something like manufacturing throw off recessionary signals because it kind of is in manufacturing, because it was operating at 120% of capacity. You bring it back to 100%. And it's a slowdown, but is that indicative of the bigger economy or indicative of something happened in the pandemic? I'd say it's the latter. So I don't really trust all those signals, but again, the Fed is the signal. And I don't know if we can handle these rates. So,
well, what's going to like it if rates are, getting close to a top. And actually, you and I talked about silver, and it looks like we're coming out of this flag. And even when gold broke down, which is now a false breakdown, right? This was a big breakdown, and people, I did a little dissertation yesterday at him where I said, oh yeah, Mr. Market, it's so nice, you missed the breakdown, but he gave you 2 chances here, and said, oh, you're a little bit slow, I know you've only been trading for 2 years, so I'll let you in here and try it again at the breakdown. And you know what? I'll even let you get short right before the Fed. Now, I'm not saying that scalps didn't work there, but the fact that we're doing this today. So the narrative, if the yen has peaked, metals look good and bonds look good. So, I think they're all kind of connected, don't you?
Well, it's okay. 2 things. This might be the dollar top, right? We talk about big intervention. Maybe that doesn't stop it, but Japan is intervening. I do see a case for buying bonds. We may be seeing the top in rates. And we all agree it's wildly crowded and overbought trade. So whether it's a short term or a long term top, great. Number
Right.
two, I look out on the horizon and the only thing I can see is government deficits.
Yeah.
This energy crisis in Europe is going to be stratospherically expensive. UK, we talked about it before, is taking on all the financial risk for consumers, half the bills for energy, which I don't think is enough. But then they can't pay for it. And the same thing is slowly unfolding in Europe. Now, when you listen to some of the European leaders, they say, listen, we're going to take care of it. We're going to take a lot of the hit. Consumers have to, save a little bit of energy as well. Sure. And businesses are going to suffer a bit. Fine. But that's just the first phase. So we get through this year, we get through the next year, the year after. What's the spending coming behind that? Massive green investment, deficit fueled. I mean, Germany's talking about a hydrogen economy. The numbers on hydrogen don't make any sense with the technology we have now. It's impossible to transport. The energy costs are insane. I mean, the spending that they're going to do in Europe, a debt crisis is inevitable. And you see in the US, there's no real fiscal hawks anymore. We didn't have it in the last administration, don't have it in this administration. The solution to every problem is to spend more money. And, at some point, right? It's like a broken record because people have been saying this forever, but boy, those costs get pretty high. And, that's when all those roads lead back to precious metals and just commodities in general, which we're coming back to, I think, an era of commodity strength, which is just broad currency debasement, right? It's the same thing.
Right. Well, every bull market in silver was accompanied by a bear market in the dollar. So, maybe silver turning before the dollar. So it's very possible. We're talking right now.
I want to ask you, you're a silver bull. I mean, I'm not that big a silver bull or a gold bull right now, but the crypto trade has kind of come undone here, right? Yeah. And I believe that was competing for dollars with precious metals in 2020, 2021 in a big way. I just struggle to see crypto regaining the enthusiasm. Now, price has a funny way of changing that when it's a bull market, but boy, there are a lot of detractors now, and a lot of it's the use case, right? We still come back to saying, well, what's the use case in a lot of these that hasn't been exploited? So, Ethereum, the merge was a bust, huge sell to fact.
Right here.
That to me is where they can both do well, I think, in a debasement kind of scenario, but it would do a lot better. I mean, we would have gotten gold another $500 higher, if not money sucked it into crypto in the last cycle there. So,
I want to touch on something that's even bigger picture, and I don't know if you're starting to think about it, but I am now, President Biden signed an executive order to move forward on central bank digital currency. And, I think that this is the biggest financial story since Nixon closed the gold window. I'm curious why it's not being covered, why people aren't asking about how it's proceeding, and talk about how abuse of power could come with a digital currency like this.
Isn't it'll be the great irony of crypto. I've written about this before, is that it starts out as this sort of way to liberate yourself from money and the government control.
That's why they let people get accustomed to cryptocurrency.
And then it gets turned on its head. They track every transaction. I mean, there are some benefits to knowing every transaction. In a macro perspective, it's much easier to manage the economy, inflation, that kind of thing. Obviously, that's not the kind of, I think, the trade-off that we want to make, but I don't know if we're going to end up with a choice. I mean, the erosion in privacy is
gone.
It's absolutely. I mean, China, they've used COVID for it, obviously here now, and power. That's what power does anywhere. It tries to get more power, and it's the aim of power. And so here we are. Here it's coming. I don't know though if it's on a 100-year timeline or a 10-year timeline.
Yeah, you have any idea when I'm hearing people say that it's only but, 2-3 years away
Yeah,
from
this
that
digital
happening.
currency, but I don't think it becomes as it sort of creeps in the insidious ways that you're talking about. But I don't have a trade on that.
No, I
Um,
know there's no trade except, you know, uh, physical metals.
Stay out of jail.
Yeah. So anyway, okay. I just brought it up to see if you had any
Yeah,
thoughts
yeah.
about it.
Physical metals
Bugs
do
me.
kind of look. Yeah, I mean that you're on the right track. I think everybody can feel it, but I don't know if anybody's doing
You know
anything
what else
about
is interesting about yesterday? You know what it was yesterday? And I'll tip my hat to Mr. W.D. Gann. It was the first day of fall. And Gann says, look for market reversals going into a change of season. That along with a change of season can come a change of direction. And to him, the time windows were the more important part than price action. So
it's a good spot for a bounce for a lot of reasons. I think the
yeah,
big trade, I made fun of natural gas traders forever. I mean, I've been long gas for a while here, but not trading it because the volatility is insane and it's a trade on the weather. And nobody knows the
it's a
weather.
great arbitrage with Europe. If you buy it
Well,
here,
so the trade
uh,
now, we're all on the weather trade now. So where everybody's on the natural gas trade in Europe, because if it's a cold winter, that's all she wrote for the
yeah,
economy in Europe. And that's going to suck down everything. And I wonder, and I really believe that a lot of the excess demand in the US is going to be soaked up by Europe. If you're a factory in Europe that's still operating, has electricity,
yeah,
um, your export market is going to be the US. You want those
yeah,
dollars bad. I mean,
yeah.
and if your domestic market's soft, you're not going to have a problem delivering the product. Shipping certainly improved. So I think they soak up a lot of that excess demand in the US and bring inflation down, but it doesn't help Europe much.
With your take on commodities in general, Adam, and we didn't even cover WTI. I have to ask you, look at this candle in Aussie. So if we are getting a dollar turn and you're a believer in commodities,
That's a nice candle.
unlike the euro, which, took out COVID, COVID lows,
Right. Still a long
you,
ways there in Aussie.
yeah, I mean, Aussie putting in a reversal day down here around 65.5 cents. Would you be interested in accumulating commodity currencies? And, that means, eventually the loonie even peaking up here. Still pretty
It,
far away from its COVID high as well. So, never
I'm
really got that.
I'm certain it's going to be
Yeah.
the trade of the decade in commodities, particularly after about 2024. Commodity currencies, provided they build the mines and attract the investment, will be a
Yeah.
great place to be.
Yeah.
Australia has that leverage towards China. Canada,
Will
with a
they
little bit more leverage.
reopen, Adam? They were talking about buying vaccine, and you're one of the first ones that talked about being worried about China a year ago,
Yeah.
before they went into lockdown. Do you think they're going to try something else after this council?
I think
Where,
yeah, and I think a lot of narratives are hanging on that. We talked about it before, and it's sort of this hope that they would do it. But you start to look out now, and you think, boy, they should be planting some seeds right now for that turn. Xi looks pretty secure.
yeah,
Either they're going to come out and announce it in one day. I don't think that's really the Chinese way. So maybe it happens in a whole bunch of steps and happens maybe next summer is starting to look optimistic or
okay,
probable. So
all right,
I think a little bit of the anxiety we see in stocks and the global economy is saying, you know what, doesn't look like it's coming anytime this year in China. We are starting to see some steps though, right? Those lockdowns ended a lot quicker.
yeah,
Maybe they just take down the testing a little bit. I don't know how many steps you need to take though to go from where they were to where the United States and most of the world is right now, in a
so
kind of
time,
Chinese way.
yeah, time for a reopening. They move like the tortoise.
Yeah.
So, um, WTI, the support level at 80, I wouldn't be short down here. looking for
seasonally,
60.
there's just everything kind of lines up in this oil trade. Seasonally, it's not great right now. We talked about that
Okay.
before. So September, October, November, pretty weak. We all know what happens in November. Not only do you have the midterms, which is why they're desperate to keep oil prices low in the US.
Yeah.
You also have the end of the seasonal trend. You have a Russia oil ban in Europe going in on December 3rd. The shipping ban, they're aiming to do it at the same time, or shipping ban, or trying to put, impose $50 oil. And then the seasonals turn. So, I'm not in a big rush here to get long oil because I think it's going to be great trade. And secondly, this is the time of year right now when oil companies set budgets for next year. I think if you had $100 oil, $110 oil, they'd be drilling a bit more. Now they're all saying we're not drilling anymore. So you just set up a bigger bull market. And I think the White House remember the White House said maybe we'll fill the SPR at 80.
Yeah.
That was a signal. They're trying to say, hey, don't stop drilling.
Yeah.
But the market they're still saying, you know what, we don't trust you. And we don't, you just talk. You'd love to have lower gas prices. Nobody knows the future. But I think, by doing all this to win the midterms, they might be setting themselves up for a lot more pain in 2024 when you can't really pull the SPR lever again and you're materially undersupplied in oil. And it looks like that'll be the time the economy should be picking up again if 2023 is soft. Rate hikes are probably late 2023. 2024 should be a pretty strong economy, strong oil demand. So a real nice trade is setting up in oil.
Yeah, it sounds like you're looking for new highs. I think we have at least some type of pop above 100 again.
Yeah.
So 104, maybe 110.
Depending on how this growth scare goes. But it's holding up better than a lot of things oil right now, but you still get some brutal volatility both ways. So I don't know if it's an oil trade or I like the oil companies a lot better than oil.
Well, the Silver Baron, Dale Pinkert, really enjoyed talking to you today. Matches my hair, Adam. What can I say?
Still trying to get my head around all this. The Bank of England.
We've got a long weekend, and really key statement about intervention being more effective if you want to weaken your currency than strengthen it.
It's
great
tough.
Takeaway on that, and always appreciate you edifying our community, Adam, and I love talking to you.
Well, thanks, Dale. I think if we've talked on a few turning point days, and I'm hopeful this is one because I don't want to see the global economy in a bad spot. So we'll see. Today would be a good day for markets to make a stand if they're going to.
I'd love to see a bear market in the dollar.
Well, Bank of Japan would agree with you.
Yeah,
a lot of people in Tokyo on your side.
Yeah, so there's anyway, high old silver.
All right.
Do you think I have a bias about? Am I acting like a rookie? Oh, yay, silver is up today. I'll do a cartwheel. Oh, silver selling off today. I'll go fetal. Anyway. It's fun after all these years of watching silver, and I, take it back to the late 70s when, they were trading silver coin bags and the Hunt brothers. And this is the most bullish I've been in the metals in many years. So wonderful. We'll see. Really appreciate your outlook on things here, Adam, and look forward to talking to you. Have a great fall trading season. And everybody check out the great work that Adam and his team do at Forex Live, and follow them on Twitter at Forex Live, or Adam individually at FX_button. Thank you, my trading warrior brother.
Right. Oh, yeah, sure. All stuff. I see a lot of talk in the chat here, so I'll hop in there for a second if anyone has any questions, and then get on with this crazy day.
All right. Thank you, Adam.
Cheers.
Have a great weekend. All right, buddy. Let's kick ass this fall. And everyone, you could join the team in 13 minutes for the morning edge. We laid it all on the court, bringing great guys like Adam for you guys. Thanks for sticking around. I know you learned some things from everyone this week. So have a great weekend. Remember, don't just count your pips, count your blessings, and hope to do it all again next week. Adios.
Hey traders, this is Blake Morrow with ForexAnalytix. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.